What's going on, guys? Connor here from the Boiler Room. Welcome back to another video. Today we're going to be looking at SNCA stock once again. I made a video on this stock just yesterday and you guys loved it so much that I had to wake up at 6 a.m. on a Saturday to make another one just for you. So with that being said, guys, make sure to hit the thumbs up button and we can rock and roll. What we're going to be looking at here on finviz.com, which is a free resource that's really awesome to use, and I highly suggest it if you're a new trader just to use it for simple information. What we're looking at is share float right here. This is the box that we're going to be focusing on. If you don't already know, share float pretty much stands for supply. Share float is one of the most important factors that day traders look for when day trading a stock. Why? Because share float is supply. Day traders like volatility because volatility leads to price movement, and price movement leads to opportunity, and opportunity leads to money. If a stock is only going from $1 to $1.05 today, that's not creating a big range, and there's not a lot of opportunity to make money on a stock that's only going from $1 to $1.05. But if a stock is going from $1 to $4, there's a $3 range there, and there's plenty of opportunity to make money on that. And a good way to find stocks that are going to have ranges from $1 to maybe $3 or $4 on a day is to find out if they can even have the potential to do so, which would be low float or a low supply. Because if a stock has a low supply and everybody wants it and there's all of a sudden a high spike in demand, the price of that stock will go up, just like anything in life. Again, it doesn't matter if it's stock, if it's a car, if it's a purse, earrings, phones, gadgets, food, does not matter. If there is a low supply of bread and everybody wants bread, the price of bread will fly. If there are no more Teslas to buy in the world, and Elon Musk and Tesla go out of business or whatever, and they stop selling Tesla cars, those will become very rare and the price may in fact go higher. Same thing with stock. Share float dictates how much supply is available to purchase. When the supply is low, mix high demand, you will see share prices many times increase dramatically. That is why day traders specifically focus so much on share float. Now you're going to ask, Connor, what's a low float? Pretty much anything below 20 million you can consider as low float. Anything below 10 million is like super, super low float. And anything below 3 or 4 million is like ungodly low float. Now we're going to be taking a look at the SNCA chart. Again, I just made a video on this, so I'm going to link a video in the description that will take you to the previous video I made on the stock. That way, I can clear a couple more things up for you, and this video might make a little bit more sense if you're already lost. This is the SNCA stock I was referring to. You can see it went from 4 and crashed all the way down to 1.5. And then earlier in the day, it started around 2 and went all the way to 4. So it had, just from this point to this point was a 100% increase. And then from this point down to this point was a 65% decrease. So what I'm getting at, there's multiple reasons why this crashed so hard. And that's why I'm saying to check out the video that I have linked in the description, because that will also cover why this crashed so hard. This video is the second part to why this crashed so hard. So there's really one main reason why this crashed, because it sold. That's just it. There was just a bunch of people selling. But if we dissect that selling and really look into what was going on, you'll become a more educated trader and better equipped for the market. And again, you might have to do that by watching the other video linked in the description. But in this case, what we have just told you guys is that the stock SNCA has a 3.2 million share float, which means that is the amount of supply. Those are the amount of shares that are regularly available on the market for me and you to trade. What we're looking at is a 5-minute chart. We're going to add up all the volume that has been traded from that candle to that candle, 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 and that candle. So we're going to look at 1, 2, 3, 4, 5 candles. We're going to add up the trading volume of all those 5 candles, and let's see where we come up, or what we come up with. So we know the supply is 3.2 million. And we're going to be taking a look at these last couple candles and seeing how much traded. This candle traded 1.9 million shares. This candle traded 500,000. This candle traded 1 million. This candle traded 1.4 million. And this candle traded 1 million. So 1 million, 1.4 is 2.4 million. Another million, that's 3.4 million. We're at 4 million. Now we're at 6 million. So just over the course of these couple candles, the stock traded 6 million shares. It has traded, just in those couple candles, 2 times the float or the supply. Okay? What does that tell us? That tells us if the stock only has 3.2 million shares to go around, and over the course of these couple candles, it traded 6, that means that everybody who owns this stock or has bought in shares on the open market now all currently own the stock SNCA at an average price of $3.50 up to $4. Nobody owns it down here, or very, very little people own shares at this price anymore. Let me repeat. Not many own shares down here at 2, or not many people own shares down here at 4, or not many people own shares here at 250 or 3. Everybody owns the stock here at 4 to 350 or 375. How? Because there's only 3.2 million to go around. Just in that small time frame, 6 million shares traded. So if the entire supply of the stock has traded at this price, how can very many people own shares down at this price when, again, there's only 3.2 million, 6 million shares traded in this small little time frame? All the shares that have been exchanged right there from trader to trader have all exchanged hands at prices of $4 to $3.75, meaning that there are very little investors, or not very many people that own shares down at this price anymore, or own shares here, or own shares here, or own shares here. So when this starts to panic sell off, wait, let me take a step back. So now that everybody owns the entire supply of the stock all at the same price, and then they all start to panic sell, that's why it drops so big, because everybody owns shares or owns the entire stock's float all at the same price. So when they all start trying to sell, they're basically selling to one another that all own shares at the same price. So why would I buy shares from you if I already have those shares at the same price, for one? And then two, if everybody owns shares all at the same price up there and they all start to panic sell out at the same time, they're basically just a stampede of sellers all trying to get out over top of one another, and they're just crushing each other on the way down. And then the part of the reason that it does tank so hard is because there was an insider who sold pretty much $7.5 million worth of stock. That was another reason, and that's why I'm telling you to watch the video linked in the description. That is about the insider that sold a lot of shares on the stock. And then the last thing you have to understand is, if not many people own shares down here or here or here, and most own them up here, then you don't have many support buyers on the way down to stop this run. Because again, if nobody owns shares down here, right? If nobody owns shares here or here or here, then nobody really cares if this comes stampeding down, other than the people that are already in the stock who own it all here. These people care if it keeps going down because they're losing money. But everybody else, nobody owns shares here, here, here. Again, everybody owns shares here at this price. So it only matters to the people that are in it selling, panicking down. They're the only people that care how far it goes down. Everybody else watching the stock, no one gives a shit because nobody owns shares here, so they don't care if it goes below that price. They'll just let it go as far as it possibly wants because they're not losing money. They have no position down here that they would want to stay above this level so that their trade stays in the green. That's simply it. Nobody really owns shares down here, so they're not willing to try and create a support to have the stock bounce and remain above their entry levels. They don't care. There is no support here. There's nobody that would be willing to support that drop. And the only people that care that it keeps going down are the people involved in it that all have an average price of $4 to $3.50. What I just explained to you, ladies and gentlemen, is what we call share float rotation. That is where the entire supply and or float of the stock completely exchanges hands from one person to the other person multiple times. And when you do that, you basically create a stock that's entire supply is at one price. And when that kickstarts a panic drop, they're usually pretty bad. And that is all I have for you, ladies and gentlemen. I hope you guys learned something new. And as always, thank you guys once again for tuning in. And the most important thing that you can do to help our channel grow is just to make sure you simply gently rub, tap, smack, abuse, or beat the thumbs up button. And that is all we have for you guys. Everybody take care, and we'll see you on the next video.